All right, so this is one of our Chapter 10 practice problems. It's number 8 in the practice problems, but it's also number 5 in your homework. So there are some things that you need to pay attention to. So you've got this corporation, and they've got all of these tangible personal property assets, okay? Now, they disposed of them in the current year. So what that means is they sold them this year, all right? And so what we need to find is what amount of depreciation expense they can deduct for 2019, given that they had all these assets, were using them as business assets, and then sold them during the current year. All right, so let's look at the information that we're given and see what we need, okay? So we're told the asset and the recovery period right here, okay? We know the date acquired. We're going to assume that's also the date placed in service. They tell us the date sold. This is our depreciation convention. Notice that some of them are half year, some of them are mid-quarter, all right? That's going to be very important to us. And then this gives us our original basis, okay? Now, let's look at our dates. So one thing that we need to take into consideration right off the bat is, I'm going to change the color here, is this computer, all right? What do we notice about this computer? We notice that it was acquired in October of 2019 and then sold in December of 2019. That's the same year. So right off the bat, you do not get to take depreciation expense on assets purchased and sold in the same year, okay? So depreciation expense related to this computer is 0. Now, a couple other things that I want to show you that I've done so we can use them as we go through this problem. So I've posted in here our half-year convention percentages, whoops, and our mid-quarter convention percentages so we can use them throughout the tables, or excuse me, throughout the problem. So what we're going to do is we're going to make just a little table for the remaining assets, okay? And so I'll move my screen around as we need to. Okay, so let me change color again and we'll start writing. So what we're going to start out calculating is full year depreciation, expense. Okay, so that's our starting point. All right, so we've got furniture, we've got machinery, we've got delivery truck, and then we've got our second machinery. This is, we'll put 16, and this will put 18. So that way you have the year, okay? So what I'm going to do is I'm going to put the basis, and then I'm going to put the percent and the convention, all right? So basis, percent, convention, all right? So our furniture's basis was $55,000. Our first machinery's basis was $72,000. Our delivery truck basis was $20,000. And our second machinery's basis was $270,000. All right, now let's copy down our convention because that matters a lot. So that was half year, then that was mid-quarter, then our delivery truck was, half year, and our machinery was mid-quarter. Okay, so now let's go find our percentages. Okay, so let's look at our furniture first. Our furniture was acquired in 2015. So that means 2015 was year 1. So 2016 was year 2. So 2017 was year 3. 2018 was year 4. So 2019 is year 5. All right, so I'm going to change this. All right, our furniture is 7-year property. All right, so we've got 7-year property, and year 5, we need to come over here. And so our percentage is 8.93%. Okay, and now let's do our other half-year property, which is our delivery truck. And our delivery truck was acquired in 2017. So 2017 was year 1, 2018 was year 2, and 2019 was year 3. So our delivery truck was 5-year property, and year 3 would be 19.2%. So let's fill that in. Okay, and I'll put the little percents behind those. All right, now let's go get our mid-quarter percentages. All right, now we have to be more careful with our mid-quarter percentages. So we need to think about what quarter this was purchased in. So if we look at our first machinery, the one that was purchased in 2016, it was purchased in March of 2016, which is the first quarter, and it is 7-year property. All right, so it's first quarter, 7-year property. So if we go down here and look at this, okay, so first quarter, 7-year property, and then what percentage do we have to worry about? So it was purchased in 2016, so 2016 was year 1, 2017 was year 2, 2018 was year 3, 2019 was year 4, all right? So that's year 4 of 7-year property, so our percentage is 10.93. So let's go fill that in. All right, and then finally, our last bit of machinery was also 7-year property. It was purchased in 2018, so 2018 was year 1, 2019 was year 2. So let's go get our percentage for that. So it was 7-year property, but it was purchased in the 4th quarter. It was purchased in the 4th quarter, all right? And so it was 7-year property purchased in the 4th quarter, and it is in its 2nd year. So our percentage in this situation then is 27.55%. So come over here. All right, so we're going to multiply these percents, all right, and that's going to give us our full year depreciation. All right, so let's do that. So our full year depreciation is 4911.5 times 0.093 20 times 0.1920 equals, 3840. And then our last one, 0.2755 times equals 74,385. All right, so those give us our full year depreciation expense. Okay, so if we weren't selling them this year in 2019, that's what our depreciation expense deduction would be for each one of those assets. All right, but our problem told us that we are selling them. Okay, so what does that mean? That means now we have to pay really close attention to the convention. Okay, and so that was our full year depreciation expense. Sorry for resizing this so much. I want to get that all there. Now, what we're going to do is we're going to take this same information and then we are going to, I'm going to move forward a page. I'll recopy all of that information and then we're going to figure out what the depreciation would be since they're selling it this year. Okay. All right. So you can see on this page, I have this one little snippet of a chart. This is going to be very important to us. All right. So I've taken the liberty of copying over our information from our previous discussion. So now what we're going to calculate is our depreciation expense since we sold these in 2020. Okay, so we've got our basis, the same as before, percentages that we had found before, our conventions. Okay, now I've added a column right here. I've added quarter sold. All right, we really don't need that for our half-year convention, but we need it for our mid-quarter conventions. Okay, so our mid-quarter convention for our machinery that we bought in 2016, when did we sell it? We sold it in the third quarter. All right, so we're going to put third here, and I'll explain why. And then our machinery that we sold, that we purchased in 2018, we sold in 2000. Hold on one second. Sorry about that. I had an interruption from the field here. So anyway, machinery that we purchased in 2018, we sold in 2019, but we sold in September of 2019. So what quarter was that we sold it in? We sold it in the third quarter again. Okay. And I realized I wrote down third quarter for the first machinery. Whoops. And that should not be first quarter. I don't know why I can't erase that. There we go. That should be first quarter for that. Sorry, y'all. This should be first quarter was when we sold it. All right. And then we sold the other one in the third quarter. All right. So I'm going to slide this way just a little bit. All right. I'm going to resize. So now convention matters a lot. Okay. Half-year convention. What is the assumption with the half-year convention? The assumption with the half-year convention is that you get half of a year of depreciation in the year you acquire the asset and place it in service, and the year you sell it. So you're going to have to, and I'm going to call this the adjustment percent. You're going to have to adjust your original depreciation by 50% for a half year, always, okay? So this delivery truck also gets adjusted 50%. Now, for mid-quarter, it's a little more complicated, and that's why we have this chart up here, okay? So for mid-quarter, we need to pay attention to this chart, okay? So if we look at our machinery that we purchased in 2016 here, all right, and we sold it in the first quarter, that means then that this is our adjustment percentage, because that's the quarter of disposition first. And so we are adjusting for the fact that in that year we sold it, we only had that property for 1 quarter of the year. All right, now our machinery that we purchased in 2018, we sold that in the third quarter. So our adjustment percentage for that is 62.5%. Whoops. Now, if we multiply across, we will get what our depreciation expense is, given that we disposed of all of these assets this year. So I'm going to call this depreciation expense for sale year, okay? And so for our machinery, our depreciation expense would be our first, not our machinery, for our furniture, we just multiply across. So 55,000 times this 8.93% times 50% gives us $2,456. And then our machinery, we're going to multiply across, and that's going to give us $984. And then our delivery truck will multiply across, and that'll give us $1,920. And then our second piece of machinery, the one that we purchased in 2018, we're going to multiply that across, and that will give us $46,491. Okay? So that is how you deal with both the half year and the mid-quarter for the year of disposition.